Hello, good morning, and this is Aidan from London on Monday the 14th of May. Unfortunately, London weather continues to be disappointing with grey skies for over a month now. So I very much hope that this will change sometime soon. And the first chart you can see today is the Australian SP200, which I touched on Wednesday of last week, and the impulse that I believe took shape has come to pass, and the red lines is the projections I made back on Wednesday of last week. So far we're moving very nicely along projected lines. I believe we have a leading impulsive sequence up from here, where 5 is, to about there. Since then we've been doing a B-wave flat correction, which is finishing around current levels, possibly will extend a little bit lower. And through the rest of this week and possibly into next week, we're going to see at the very least a C wave move higher of about 3%. There is quite a high chance that we will move on to make new highs in the Australian as well as some other developed market indices, which is particularly visible on the Dow. The Dow here, which is about to be pulled up. And if I go to a 4-hourly chart, I will particularly highlight the move on the 1st of May following a very bullish ISM report on business release, when we made a new high above our March highs, just there. This confirms that we are having at the very least, we are having in fact, not at the very least, very possibly an unfolding irregular flat correction. So we have waves A, B and C. Waves A, B and C, which altogether comprise wave B, and currently doing a wave C. Altogether that will go as follows: A, B and C. Now, because this made a new high and because this was a 3-wave correction, it is quite likely that the trend will continue and we will see a new high above 13,012.86. How high that will go is obviously anyone's guess, but the projection we can make is that it will go fairly high, probably as high as this move here, which was 10%. Now a 10% move from current levels, or even just below current levels, would be way in excess of 13,700. I imagine that this will make people extremely bullish. So this remains my outlandish projection that we are going to see new highs, at least 13,500, in the Dow in the US. And now let's look at the S&P 500. The S&P 500, you can see my current working count, and that is waves 1, 2, 3, 4, 5. Whether that will be a wave 3 or wave C, that will whether this move from current levels to new highs will complete a wave, a structure that was unfolding from the November 2011 low is quite the confidence in that is quite high. So when we do make a new high above 1420, I believe we will top for some sort of a correction. But whether we then will have topped out for the whole cycle since October 2011, that is still open to some debate. That depends really on how the patterns will unfold and what we will see from there. But right now, suffice it to say that the structure that began at the end of March here in the S&P 500, waves A, waves B and wave C, is much closer to the end than it is to the beginning of anything substantial. I repeat, I do not see sustained weakness from current levels. We may decline to 1330 or possibly even 1320. That is definitely possible, but I would be rather shocked to see sustained weakness. So from there I will turn into a better buyer and will seek to profit from a move higher. The next chart I'd like to show you is one of my favorites, the Dutch AEX index. You have seen it many times in my previous updates. Here we go on a 4-hourly chart. As you can see, I believe that the 5-wave sequence of fairly large magnitude, so that's 13%, has finished on Monday of last week following Greek and French elections. Right here we have waves 1, 2, 3, 4 and 5, where wave 3 very neatly subdivides 1, 2, 3, 4, 5. Since then we probably had some sort of an impulse here, a rally on that day. So that very same day we had a rally of just over 4%, and all of last week and so far this week I believe we have been correcting. Let's go into a junior time frame. There we go. So that here is probably an impulse, wave 1. Since then we had wave A, wave B irregular, and currently unfolding is wave C. What we want to see in this wave C is a clean 5-wave impulse lower, following which we could entertain entering long positions. So right here we can count a wave 1, 2, probably wave 3 finishing around here somewhere around current levels, possibly going a little bit lower towards 295 or so, maybe even towards 295.50. And from there I would be a better buyer, and my stop loss will be quite firm below Monday's lows, which is 292.47 or 50. That's about 1% risk, which is what I'll be prepared to risk on this trade. And my upside is at the very least fourth wave of a lesser degree. So if we say fall to 295.50, I'll be looking at the very least at 310, so that's 5%, giving us very nice 5-to-1 risk reward. Again, we just need to see a very neat 5-wave impulse here, which is almost forming now. I would imagine there'll be some dithering here and then a little dump into US Open and then possibly go long. This view is further corroborated by my analysis of the Euro-Dollar and Dollar-Swiss charts on both senior and junior time frames. Let's go Dollar-Swiss on a 4-hourly chart. Here we go, and you can see a textbook Elliott wave formation here, wave 1, wave 2, wave 3, and wave 4, and wave 5 finishing in January of 2012. Now this massive impulsive sequence really does need to be corrected, and so far this correction is rather insufficient. So I would very much like to see Dollar Swiss fall at least another 9 or so percent, or well, let's go about 8% to about 85.60, possibly 85 centimes, I'm sorry. And from there, that will give me a very nice base to launch a much bigger rally. Do I think that the move higher is closer to the end? Absolutely. You can see resistance levels here on Dollar Swiss, as well as the internal structure of the move higher from the May low of just above 90 centimes. Let's zoom into that. And this is the move here. Now we probably had wave 1, 2, wave 3, 4, and currently unfolding is wave 5, which so far has been rather beautifully diagonal in nature. Diagonal simply means that there is overlapping price action. So you see waves A, B, C, A, B, C, C, and A, B, and C, wave E of the diagonal. The view, this view is substantially strengthened on a move through the diagonal line. So now today that would be about 93 the figure, and of course you can have a firm stop loss level as soon as we move through 95.75, in which case the stop loss will turn out to be the high. So we need to stay on the lookout for a 5-wave impulsive sequence, and then we can be more sure in an impending dollar weakness view. The euro dollar is inverse of Dollar Swiss right here, and we have waves 1, 2, 3, 4, and unfolding diagonal ABC, ABC, and ABC with price action overlapping at all levels. Beautiful diagonal unfolding, possibly finishing here. For those who are not very risk averse, you could risk a figure from current levels, say to 2770, and your target is at the very least about 31 and change, so giving you a nice 3-to-1 risk reward at current levels. Thank you very much for listening, and I very much hope that you enjoyed this forecast and found it useful. Let me just try and turn off. Goodbye.